Let me talk to you about a no-doc business loan application. How do you get a massive amount easily and quickly, no matter what? Don't go anywhere. I know you're going to love today's conversation. I guarantee it. Welcome back, folks, to another edition of the Awesome Studio Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee, or tea, or vodka, and let's roll. In today's conversation, we want to have a clear tutorial about how to get a massive no-doc business loan amount easily and quickly, come rain or shine. Okay, the first thing you need to do is to take care of the legalese. It's so important, folks. The legality of your business must be straightforward. You want to make sure the business is legit and that you can prove it. It's important. Just don't tell me, oh, my business is legit. Okay, can you prove it? Can you show me the paperwork that shows that your business is legit? This is important. If you're trying to get a no-doc business loan, you got to have a business. All right, not a sole proprietorship, not a side gig. No, it has to be legally structured. You got to think about business licenses and permits. Talk to me about that. Do you have the required business licenses and permits in your industry? Talk to me about it. Those are important. Don't take this lightly. What about new employee reporting? Are you hiring people? If you're hiring people, you better actually report those employees to the state, because you need to pay payroll taxes. Okay, you need to set up the payroll taxes. It's important. And don't forget about insurance. We're talking about E&O insurance, errors and omissions insurance. So if something happens to you or to your employees, you are covered. Okay, those are really quintessential when it comes to making sure your business is legally structured. Think about your EIN. You better have an EIN, okay? Your employer identification number. This is something you need to get with the IRS. It takes about 10 minutes to apply, and you get the results very quickly. It's nothing complicated. You want to think about the legal structure. What is your legal structure? I was talking to you earlier about shying away from sole proprietorship. You definitely should. Now, what you want to do is you need to make a decision whether or not you want to be an LLC, a limited liability company, an LP, an S Corp or C Corp. So the constellation of choices is really there. So it's up to you to actually adjust your industry, your company, to the legal structure you need. Okay. So the first step is very important. If you want to get a massive loan amount easily and quickly, a no-doc business loan, you better show the lender that you are legally structured and that you know exactly what you're doing. Okay, so when we talk about no-doc business loans, this is not about business insurance. They will be checking that. They'll be checking your business licenses and permits. That kind of documentation is needed. So when we talk about no-doc business loans, we are speaking about proof of income or other financial matters. But you need to prove that your business is legit. The second thing I want you to do here is to understand what no-doc business loans really mean. Because a lot of people just walk around talking about, I want a no-doc business loan. Do you know what that means? Do you have a clear idea what we're talking about here, or are you just like throwing out words? Okay, so when we talk about a no-doc business loan, we are talking about a loans process where no financial statement is provided. No tax return is shown. For example, if you have a legit company, the lender is not asking you for your balance sheet. They're not interested in your statement of cash flows. They're not interested in your P&L, in your profit and loss statement. They're not interested in your statement of owner's equity. Okay, and they're not interested in your tax return. In other words, they don't want to see your 1120S or 1120C or your 1065, and they're not interested in that. If you have a side gig, they're not interested in seeing your 1040 Form 1040 Schedule C. Okay, so that's what a no-doc business loan means. One thing they might be interested in seeing is they want to have a background about the company and the founders. In other words, you want to have a clear idea of who is behind the company, who the founders are, what is their LinkedIn profile, okay, in case they do have LinkedIn profile, or they might have to submit their resumes, okay? And also, the lender wants to see generally 3 months of bank statements. Okay, so 3 months of bank statements. If you don't have the bank statements, you're going to have to connect your bank account to their system. In other words, the bottom line here is that lenders care about cash flows, nothing else. They don't care about the statement of cash. They don't care about the statement of income or your balance sheet, although that could be important. But they care about cash flows, and as long as you can provide cash flow, you can document your cash flows. It's important. Now, normally, if you have a legit business, you have your accounting system set up. Either you have outsourced the accounting or you're doing it yourself internally. You should be able to show that cash is coming in, right? Because at the end of the day, people sometimes believe that a no doc business loan means they don't have to show anything. Come on. Are you serious? Is there anybody in this world who will give you cash for nothing? No. You better show something. You better actually show something for them to give you the cash that you need. Okay. And that's the minimum. The minimum that you need to show is 3 months of bank statements, or you connect your accounting software to their system, or your bank account to their system. There is a software called Plaid, and Plaid actually enables them to actually log into your account so they can monitor transactions in your bank account. So this is something you need to think about. So the third step is you need to plan. Folks, we are still having a conversation here about no doc business loan applications, how to get a massive amount easily and quickly no matter what. Number one, you need to understand the legalese. Number two, you need to understand what no doc business loans mean. Number three, you need to plan the application process. Did you hear that? Planning. All right. I'm not talking to you about just sitting around and just writing stuff on a piece of paper. No, you better come equipped with a strong business plan. You want to start that. A business plan, people think, oh, a business plan, it's for investors. No way, Jose. No. You know what? A business plan is great for yourself, but also for the lender. But in this case, it's not just for the lender, really, because the lender doesn't need a business plan, but they want to have a clear idea that this business is well managed. Okay. So when you have a business plan, it's great for yourself because you know where you have been, operationally speaking, you know where you are going, where your business is going, and you know where your business is at right now, financially, operationally, competitively, what's going on in the industry, all that kind of stuff. Okay. And please, if you don't have no talent for writing business literature, you want to outsource the activity. Okay, you can go on websites such as Fiverr, Upwork, Freelancer, or you can actually hire someone locally to write the business plan, or you can even buy software for it. Okay, the bottom line is you want to have something professional. Do not go on the internet and lift some kind of cheap business plan. Nobody wants that. And you want to document how the loan proceeds will benefit your company, because the lender is interested in how the loan proceeds will help you make more money. First of all, it will help you repay them and also help you make more money. So it's important. Okay. And if you need professional guidance, if during the process you need someone to actually accompany you, a business consultant or a business plan writer, an accountant, a CPA, whatever, please reach out to those persons, because at the end of the day, if you're getting a loan for $250,000, it's okay to pay someone $500 or $300 to sort of guide you through the process. Okay. And are you looking for a direct lender or marketplace lender? So when we talk about no doc business loan, those loans are not coming from your traditional bank. No, those loans are not coming from your credit union. No, Chase is not going to give you a no doc business loan, or National Navy Federal is not going to grant you a no doc business loan. Those are coming from a small niche of lenders called alternative lenders. Okay. And so you have to make a decision whether or not you're looking for a direct lender or marketplace lender. A direct lender is just one person. A marketplace lender means that you are submitting your application, and your application goes through a network of lenders who will have to come back to you with offers. Okay. And so one thing you need to understand is that no documentation is asked during the application process, but there's a question you need to ask yourself. Does your company have an accounting system set up at all? And you must have an accounting system. Okay. Because if you have a business, you are going to pay taxes. And if you don't have an accounting system set up, guess what? You might be in trouble come tax time. Number 4, I want you to pay attention to the cash flows. So when we talk about cash flows, what are we talking about? Hello, are you there? Talk to me. We're talking about cash inflows and cash outflows, right? It's important. So, what is the liquidity situation right now for real? I'm not asking you to sugarcoat the whole conversation. Talk to me for real about your liquidity situation. What is it? Are you in the red? Are you in the black? What's going on here? So, when we talk about cash flows, you want to straighten out your cash flows because the lender is going to ask questions about it. If you remember, I was talking to you about the lender not caring about your P&L, not caring. They want to see your bank statements and by extension your cash flow statement. Okay, because this is really what really matters when it comes to repaying the loan. Okay, so when we talk about cash flows, we are talking about three types of cash flows. We have your cash flow from operating activities. So this is money that you generate from the business core activities. So if you sell a service, if you provide a service or you sell a product, this is cash that comes from customers. Okay, nothing else, straight from customers. And then you have cash flows from investing activities. So let's say, for instance, that a company has extra cash and has paid some stocks and bonds or has paid land. So anything that the company spends on investments, you put that in the cash flows from investing activities. And then you have cash flows from financing activities. So anything that you borrow, if you borrow or you have investors putting some money into the business, you will classify those into the cash flows from financing activities. This is important because the lender is going to pay attention to money that is coming from other sources. In other words, what is your debt to income ratio? If you want to borrow from a lender and they realize that you already owe, let's say, $250,000 and you haven't paid those lenders yet, why do you think they'll be lending you money? It doesn't make sense. It's all about them covering their ass, right? It's all about mitigating the risks. So if they have to mitigate credit risks, they need to pay attention to your debt to income ratio, making sure that you have the ability to repay them. And that just makes sense. Think about it. And they also pay attention to the monetary infusion from owners. What is the cash infusion from owners? Are owners putting money into the business, or are they just taking money out of the business? Right? It's all about that. So, and there is a statement called the statements of owner's equity that details, that elaborates on those transactions. Now let's talk about loans. So you want to know what types of loans may qualify for no documentation loans, rather. Okay, so you want to pay attention to the typology of those loans. It's important. Now, all no doc loans are collateralized loans, meaning the asset that you buy with the loan proceeds is basically the collateral. This is why the lender doesn't care much about your documentation, because they know that the loan that you're getting is collateralized. So they are mitigating risk. Everybody is happy. It's a win-win situation. Okay. So you can think about no doc loans being things like equipment financing. You have business auto loans. You have merchant cash advances. You also have invoice factoring, invoice financing, invoice discounting. Let's talk about MCAs, for example. So merchant cash advance companies provide funds to businesses in exchange for a percentage of a business's daily credit card income directly from the processor that clears and settles the credit card payments. Okay, so a company's remittances are drawn from customers' debit and credit card purchases on a daily basis until the obligation has been met. So you cannot have a merchant cash advance if you are selling in cash. If your customers are paying in cash, you cannot have an MCA. And you also have to think about invoice factoring, invoice financing, invoice discounting. Okay, so invoice financing means what? Businesses who choose to borrow money against the amount due from their customers. Okay, and as opposed to taking up a business loan, invoice financing allows your business to strengthen its cash flows by borrowing money based on the amount due from customers. Okay, and you can monetize your account receivables or unpaid invoices. So instead of waiting up to 150 days for payments, your business can obtain working capital from day one of issuing the invoice, often within 48 hours of sending the verified invoice. Okay, and when the invoice is due, your buyer makes payment and your business will receive the balance minus interest and fees. You also have invoice factoring. So businesses who fund their cash flow by selling their invoices to a factoring company at a discount. So the differentiating factor with which sets invoice factoring apart is the essential qualifying requirements: having outstanding invoices from approved and creditworthy clients and who handles customer payments. And then you also have invoice discounting. So businesses who choose to maintain control over the collection of payments, and their customers need not know about any third-party involvement. Okay, so this is something that you need to think about. So if you are a business owner, you would send an accounts receivable report to the finance company at least once a month, aggregating receivables into the categories required by the lender. Then the lender will use this information to adjust the amount of debt that they are willing to loan you. Okay. One thing I want to say here is that you can also have an unsecured business loan, but you need to have excellent credit. Okay. If you don't have excellent credit, you may need a decent credit score to qualify for this kind of no doc loan, even though you could also structure it on an EIN only basis. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Story Kiwi Show. We are still having a conversation about no doc business loan, how to get a massive amount early and very quickly. And let's talk about the lenders. Okay, you want to find out which lenders are providing no doc business loans. You have several lenders out there. We have Riviera Finance. They are really great when it comes to invoice factoring. We love the fact that there's no credit check, no time and business requirements, no revenue requirements. Okay, but if you are in a B2C space, they are not. They may not good for you, and so they're really great with invoice factoring. Okay, and you have Triton Capital, and this is great for equipment loans. Okay, if you're looking for equipment loans, you might want to try them. Okay, and they don't require a lot of documentation. The maximum loan amount $250,000. Okay, and the APR goes from 4.99 to 25%. And then you have PayPal Working Capital. This is a no doc business loan because PayPal cares about your cash flows. You need to have a PayPal account. And so if you're a PayPal seller, this is great. PayPal does not ask you for anything. They just take a look at your cash flows, what's coming in, what's going out, and they just make a determination about how much you can qualify for. You have easy automatic repayments. You have quick access to cash, no credit check, and you have national funding. And national funding, you can actually get approved for a no doc business loan from $5,000 to $1 million. Okay, and if you structure it correctly, they only care about the cash inflows and the cash outflows. So they will ask you for your bank statements, or they may ask you to connect your system, your accounting system, to their accounting system. That's all it is. And then you also have to think about capitals. So we love capitals because they do have short-term loans with no documentation required. Okay, and they want you to have at least $250,000 average annual revenue, and they will fund you from $5,000 to $500,000. And then you have base to credit. So base to credit is kind of cool also, and they do have a variety of loan options, and some of them could be no documentation loans. Okay, and they can do this for merchant cash advances and sometimes for lines of credit. And maximum loan amounts here $5 million. Okay, and we love the fact that with biz to credit, so biz to credit is basically a marketplace lender. So the loans will come from a network of financial institutions, and borrowers are matched with loan options, and you have a wide constellation of loans. So this is really, really good. So the seventh step, you need to think about repayments. Okay, it's all good to think about getting a massive loan amount. Okay, how about repayment? Have you thought about that? Have you planned your repayment process? This is important. You need to plan the repayment process, and there are some tips to budget online business loan repayments. It's important. You want to speak to your lender, and you want to understand your business loan repayment schedule. Okay, and because some of these loans are paid daily, some weekly, some every 2 weeks, some monthly. So you better have a clear idea of the frequency with which you should repay your loan. Okay, you need to budget the interest you expect to pay into each of your payments. Okay, change your loan repayment to reflect the principal of interest, the principal and interest total together. This is important. And you want to use loan repayment calculators to determine how much should be repaid each month. What I'm trying to say here is that you need to have a clear idea of how much is coming out each month in terms of cash outflows to cover the loan payments. And by the way, you can make a business plan. I was talking to you earlier about having a business plan. A business plan is not just about the competitive analysis of your industry, the SWOT analysis, the strengths, the weaknesses, the opportunities and threats. No. It's also about accounting prediction. It's also about sales projections. It's also about financial statements. Okay, and you want to reevaluate your budget and debt from time to time to see if it's a great idea to continue you having the debt that you currently have. You need to understand your current cash flow situation. As I've been telling you all along, it's all about figuring that you have enough cash to cover the loan. Think about your debt to income ratio. Okay, this is important. And in reducing your debt to income ratio, you want to pay attention to reducing your expenses. It's really important because at the end of the day, when you are planning the repayment process for a no-doc business loan, if you want to have extra cash to take care of other stuff in your business, you need to reduce expenses, okay? And you also need to invest in accounting software. Yeah, you might be thinking, why do I need accounting software? Well, accounting software does a lot of the work for you. And this is why I was just talking to you earlier about having a legit business. You want to set up you want to set up your accounting process. You want to set up your payroll accounting process. And you can do this in-house, or you can outsource the whole activity. It doesn't matter, but it has to be done well. And also, please pay your bills on time. Pay your other bills on time. Not just this bill when you get the no-doc business loan, but you also want to pay your other bills on time. At the end of the day, you are trying to build what? You're trying to build business credit and also personal credit at the same time. Okay, so this is really important. Okay, folks, this is it for today's conversation. I was talking to you earlier I was giving you a tutorial about how to get a massive no-doc business loan amount easily and quickly. Number one, take care of the legalese. Number two, understand what we're talking about here in terms of no-doc business loans. Number three, you want to plan your application. Number four, you want to straighten out your cash flows. Number five, you want to have a clear idea of the types of loans that may qualify for no-doc business loans. Number six, you want to know the best lenders. Number seven, you want to plan your repayment process. Thank you so much for your attention. I'll speak to you another time, but until then, remember, stay marvelous.